Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you as always for coming on today.
Good afternoon, Devin.
Well, Wall Street was closed on Monday for Labor Day, but in trade on Tuesday, stocks were down again. The S&P by 0.4%, the Dow by a little over 0.5%, the Nasdaq off by even more. Treasury yields moving higher as investors see another big rate hike ahead from the Fed. What's the story in the global markets?
U.S. Stock indexes fell Tuesday, driven mostly by expectations for tighter Federal Reserve policy and on energy crisis in Europe. The S&P 500 declined 0.4% after the long Labor Day weekend. Within the S&P 500, 7 out of 11 sectors were in red on Tuesday, with industrials, healthcare, and real estate utilities gaining. The Dow Jones Industrial Average is lead 0.6%. The tech-focused Nasdaq Composite lost 0.7%, down for 7 straight trading days, which is the longest losing streak since November 2016. Stocks around the globe have come under pressure in recent weeks as worries about tighter monetary policy in the U.S. and the darkening economic outlook in Europe have led investors to sell riskier assets. In Asia, Hong Kong's Hang Seng fell 1.1%, while China's Shanghai Composite ended higher by 0.1% today. Japan's Nikkei 225 slipped 0.7% as of 3 p.m. in Seoul time.
Well, now today, Korean stocks down rather sharply. Both the KOSPI and the KOSDAQ down by almost 1.5%. Shares of Samsung Electronics leading the decline as foreign investors sell. Tell us about the domestic market.
Domestic markets today highly adjusted to downside. Domestic markets investors have growing concerns of higher rising $1 exchange rate, higher recession possibility, and quite a few external risk factors like continuing war in Ukraine. In addition, yesterday's U.S. market drop gave an additional burden to domestic market today. The benchmark KOSPI retreated 1.4%, and KOSDAQ also dropped 1.5%. In KOSPI market, foreign investors and domestic institutional investors together net sold stocks up to 716 billion won, which is the larger than average net daily sales amount. Most of top 20 large cap stocks dropped today. Samsung Electronics dropped 1.9%. SK Hynix also lost 1.5%. But LG Energy Solution, LG Chemical, Hyundai Motor, and Kia Motor rose today.
Well, as you mentioned, Professor, a major part of the story, the depreciation of the Korean won against the U.S. dollar. The exchange rate's now above 1,380. Again, the highest since the financial crisis 13 years ago. At the moment, the won is now losing ground even faster than the Japanese yen. What's happening with the currency, and what's to be done about it?
Foreign exchange market in Korea is under almost perfect situation for weakening Korean won or higher $1 exchange rate. Major factors for weak Korean wons are aggressive interest rate hikes by U.S. Fed, a continuing Fed deficit, and foreign investors' sales in domestic equity market. Today, Korean won declined down to near the 1,388 won level against the U.S. dollar for the first time in more than 13 years during intraday trading. Actually, in the last few weeks, Korean foreign exchange authorities intervened both verbally and directly, but their efforts were not enough to stop the exchange rate from soaring. Since the speed of interest rate hike is in U.S. is higher, faster, the Korean won is expected to more depreciated until the end of this year. Some aggressive market expectations are the $1 exchange rate can hit 1,451 per dollar until the end of this year.
Well, we'll keep our eye on that for sure. Finally, Professor, data show in trade that Korea posted a current account surplus for the month of July, but it was way down from a year ago by 85%. The goods account was actually in the red for the first time in a decade. This again, the cost of imported oil and other raw materials. What's the story in trade right now?
According to Bank of Korea, Korean economy posted a current account surplus for the third straight month in July. But the size of surplus declined as the goods balance turned negative for the first time in about 10 years. The current account surplus came to about $1.1 billion in July, compared with a surplus of $5.6 billion posted a month earlier. Also, in yearly comparison, the July surplus was much smaller than the same month in earlier when the country logged a surplus of $7.7 billion. The sharp decline came as Korea's import sales mounted at a faster pace than overseas shipments, driven by high energy and commodity prices amid the global supply chain disruptions worsened by the ongoing war in Ukraine. Related to this, a rising concern is that Korea's widening trade deficit has exerted downward pressure on the local currency. So as we talked about, the Korean won has slid more than 13% against the US dollars from the beginning of this year.
Right, pretty incredible. Well, Professor, we'll have to leave it there for today. Thank you, as always, for coming on the program. We really appreciate your insights.
Thank you, Devin.